Hey everyone, get ready because something absolutely massive is happening right now that could completely reshape your financial future. We're seeing historic moves in the precious metals market, with silver finally breaking above $40 an ounce, a level we haven't touched in over a decade. This isn't just a blip, it's a signal, a huge flashing warning light that something fundamentally different is unfolding in our economy. If you've been watching the markets or even just feeling the pinch at the grocery store, you know things are getting wild. And what's happening with silver and gold is at the very heart of it. Let's talk about silver first. It's been the underdog, the quiet performer, for too long. Think about it. Copper, a key industrial metal, is well above its 2011 high. Gold, the classic safe haven, is not just above its 2011 high, but it's pushing new records. Even gold mining stocks, the companies that dig gold out of the ground, are making fresh highs. And then there's silver, just now clawing its way past $40. When you adjust for the constant erosion of our dollar's buying power, the way money loses value by about 90% every decade, silver should actually be trading at $100 or even $200 an ounce just to match its old peak. So it's either totally worthless or it's been hugely overlooked and it's finally about to make an explosive move to catch up. I'm betting on the catch-up. We're not just talking about hitting $50 and stopping. That $50 mark, it was a fleeting, almost phantom high before, lasting hours or a few days. And in today's dollars, it's not even a real high at all. Traders who focus on that number are missing the bigger picture. We're already seeing momentum build and the signals are clear. Silver is likely headed for $60 or $70 an ounce in this current surge and potentially much, much higher. This isn't just about price anymore. It's about a massive repricing of something that has been vastly undervalued for years. One of the most telling signs is the relationship between gold and silver, what we call the spread. We measure silver's price as a percentage of gold's price. Right now, silver is hovering just above 1% of gold's value. But in strong bull markets, like the late 1970s or 2010 to 2011, silver was trading at 3.5% to even 6% of gold's price. Think about that for a second. Historically, whenever silver starts to beat gold, it doesn't mean gold is falling. It means both metals are surging upward, with silver simply outpacing gold. Our analysis shows that this spread is about to make a major breakout, likely heading to at least 2% of gold's value by year end. What does that mean for you? If gold just stood still, silver hitting 2% of gold's price would put it around $70 an ounce. But here's the kicker. Gold isn't standing still. Gold, the traditional safe haven, is also on an incredible run, currently trading around $3,500 an ounce. For 5 months, it just moved sideways, letting all the doubters think it was going to crash. They kept selling into it, expecting a big correction, but guess what? It didn't correct big, it corrected by simply standing still, building massive energy. And now, gold is breaking out again, setting the stage for what could be an unprecedented surge. Historically, gold has had two eightfold moves since it was legalized in the U.S., from 1976 to 1980, and again from 2001 to 2011. If gold simply repeats what it's done twice before, starting from its recent low of around $1,500, we could be looking at $8,000 or even $9,000 gold. And that's just reflecting past performance. Given the current global situation, we could see it go way beyond that, potentially even reaching $10,000 or $20,000. This isn't just a big deal. It's a sign that the entire financial landscape is shifting beneath our feet. So why is this time different? It's not just a typical boom-bust cycle. We're facing a combination of macroeconomic events that are far more fundamental and widespread. The stock market, it's showing all the signs of a massive topping pattern that's been in the works since early this year. We've just seen the biggest stock bubble in U.S. history, with the NASDAQ 100 going 20-fold and the S&P 500 going 10-fold over the past 15 years. The dollar? It's been trading sideways for about a decade, but now it's starting to enter what could be a dynamic bear market. A weakening dollar typically provides a huge tailwind for gold. Treasury bonds. They're usually seen as a safe alternative to stocks, but they're looking incredibly weak right now. They're behaving more like the stock market, and if they break certain levels, we could see a mini bond market event that would send shivers through the stock market. Even cryptocurrencies like Bitcoin are in a potential crash situation. With financial institutions now heavily involved, a crash there could have huge ripple effects across the entire system. These aren't isolated events, they're all interconnected, creating a perfect storm. For about a century, governments have been excessively using money as a tool to survive, constantly printing more, cutting interest rates, and engaging in massive programs like quantitative easing. This has continuously eroded the real buying power of our money. Think about it. Your granddad bought a house for about $4,500. Today, that same house costs $450,000. That's the definition of money losing its value. But this time, the old playbook won't work. When the stock market finally breaks, the real-world consequences will be severe, far more painful and global than what we saw in 2008. This crisis isn't just print-awayable. It's going to cause deep doubt and force massive changes in institutions we've taken for granted, including possibly even the Federal Reserve itself. The idea of an independent central bank setting the price of money is being questioned even at high levels of government. If events get truly dark economically, we might even see fundamental changes to our tax system, like income taxes, going out the window. And here's something else that's going to hit hard. Commodities are about to explode. We're talking about everything from oil to grains. Our analysis shows that crude oil is poised for a major breakout, potentially surging 50% or more very quickly. The Bloomberg Commodity Index is in a similar position. When you pull up to the gas pump and pay 50% more than you did 6 months ago, or see food prices skyrocket, that's going to create widespread doubt and pain. These are the kinds of events that will make people ask, where should my money be? What is real value? This is why gold and silver are so important right now. This isn't simply a trade, it's a fundamental awakening. People are realizing that gold and silver are real money, and government currencies ultimately lack intrinsic value. When the system comes under this kind of strain, these monetary metals are likely to become institutionalized again as money, staying high and stable. This is a crucial distinction from previous bull markets. So where should you be focusing? Right now, all signs point to the silver component of the monetary metals being the place to be. Gold miners are also outperforming gold, so they're worth a look too. We're not even thinking about taking profits on silver until it hits that $60 or $70 range. This move is still just beginning. Don't wait for the headlines to scream about these events, because by then, you'll be late. These factors are now at a cascade point, poised to create total panic among central banks and financial institutions. The time to understand what's happening and position yourself is now. If you found this information valuable, make sure to like this video, subscribe to the channel, and hit that notification bell so you don't miss our next update on these critical market shifts. Thank you for watching, and I'll see you in the next one.